Hello, everyone. I'm James. Over the last few days, we've talked a lot about the urgency, the deadlines, and the aggressive penalties surrounding retirement accounts. But today, I want to pull back the curtain on the mechanics. If you are 73 or older, or if you're approaching that milestone, you don't need more noise. Need clarity in the next 10 minutes. I'm going to explain exactly how the required minimum distribution, or RMD, works, why the IRS created it, and how you can navigate it without losing your mind or your savings. Let's start with the why. The federal government allowed you to grow your money. Tax deferred in your IRA or 401k for decades. But they aren't doing it out of the goodness of their hearts. They've been waiting for the day you turn 73 so they can finally collect their share. An RMD is essentially the government saying, time is up. We want our taxes now. Now, let's get into the how. Many people ask me, James, how do I even know how much to take? It's a mathematical formula, not a guess. You take the total balance of all your tax-deferred accounts as of December 30 of the previous year. You then take that number and divide it by a distribution period found in the IRS Uniform Lifetime Table. For most people at age 73, that factor is 26.5. For example, if you had $100,000 in your IRA last December, you divide that by 26.5. Your RMD is $3,773. It sounds simple, but here's where people trip up. If you have multiple IRAs, you can calculate the total amount and take it from just one of them. However, if you have multiple 401k plans, you generally must take a separate RMD from each individual plan. Mixing those up is a fast track to an audit. Let's talk about the Secure Act 2.0. This changed the game. The age for starting RMDs moved to 73 in 2023, and it's scheduled to move to 75 in 2033. You turned 72 in 2022. You were already under the old rules. If you turn 73 this year, 2025, you are officially in the zone. You have until April 1st of the year after you turn 73 to take your first distribution. But be careful if you wait until April. You'll have to take 2 distributions in one tax year, which could push you into a much higher tax bracket. A crucial point for my Hinnetworth viewers. Social Security and Medicare. Taking an RMD increases your adjusted gross income. This can trigger something called IRMA, income-related monthly adjustment amount. If your income jumps because of a large RMD, your Medicare premiums could double or even triple 2 years down the line. It's a hidden tax that most people never see coming. Is there a way out? Yes. If you don't need the money to live on, don't just take the cash and put it in a savings account where it will be taxed. Use the QCD, the Qualified Charitable Distribution. You can move up to $105,000 per year directly from your IRA. 2A501 C3 Charity. It satisfies your RMD, but the money is never added to your adjusted gross income. You help a cause you care about, and the IRS gets exactly $0. For those of you with Roth IRAs, I have good news. You don't have RMDs during your lifetime. This is why many of my clients look into Roth conversions earlier in retirement. You pay the tax now to avoid the RMD headache later. But that is a strategy for another day. As we close out this year, your task is simple. Log into your accounts. Look for the RMD dashboard. Every major custodian, Vanguard, Schwab has one. Verify that your distribution has been processed. Don't assume your advisor did it. Don't assume the bank's computer handled it. Verify it. Retirement is supposed to be the reward for a lifetime of hard work. It shouldn't be a constant battle with tax codes and deadlines. But in the system we have, Knowledge is the only way to stay protected. If this deep dive was helpful, please hit the subscribe button. My goal is to make sure you keep more of what you earned. Share this with anyone who is feeling overwhelmed. By these rules, sometimes 5 minutes of clear explanation is worth more than 1,000 pages of IRS fine print. I'm James. Thank you for watching. Stay informed and stay in control.